Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Andrew Little, research analyst at GlobalX, to discuss why telemedicine and digital health are here to stay and how investors can capitalize on that trend. Andrew, it's great to see you. Welcome to Trade Talks.
Hey, Jill. Thanks for having me today.
You got it. And tell us how COVID-19 accelerated the adoption of telemedicine and digital health.
Definitely. So we saw dramatic increases in telemedicine volumes and general adoption of these services as people looked for healthcare from the comfort of their own homes. There really are some amazing numbers when it comes to the adoption of these services. At some points during the pandemic, providers saw telemedicine visits increasing as much as 175 times. Compared to 2019, just a year ago, we saw the percent of U.S. patients who would use telehealth rising from just 11% to 46%. During the pandemic, which of course is still ongoing. Also, connected healthcare devices became an important tool for remote patient monitoring and also for preventative care. We see virtual intensive care units with connected devices being important for monitoring, as well as wearables that individuals can wear to look at their own health, also giving that information to doctors. We also saw instances where healthcare data became an important tool for drug developers and also for the healthcare system. Advances in genomics, also just general digitization, meant that drug developers could use information about the virus behind COVID-19 to approach it accordingly. And then also in hospitals, data around patients and also just on hospital operations could be used to help triage different functions. So while the pandemic, of course, again, is still in full force, we're still seeing this play out and evolve. And the disruption that we're seeing has been usually what you see in many years, but it's just taken place over a number of months.
Why do you think the adoption of telemedicine and digital health was inevitable based on pre-pandemic structural trends?
Yeah, we think that this theme and the adoption of telemedicine and digital health, it's been a long time coming. The pandemic really acted as an accelerant for the theme, which already had those structural trends underpinning it. First, we have and have had for forever stark healthcare inequality, both due to finances and also geography. Around 100 million people go into poverty every year due to healthcare expenses, and many just aren't near the health services they need. We think that telemedicine can fix both of these things. Next, you have aging populations. Older individuals tend to need more healthcare, and telemedicine can help them get that care. And that there's also this pervasive inefficiency in healthcare systems around the world. Across all OECD countries, around 1/5 of annual healthcare expenditures come from inefficiencies. And then finally, with every passing day, the world gets more connected, and this really is the fuel behind all of this type of technology. And we really think that altogether, these themes present a great investment thesis on their own.
Yeah, they're all excellent points. So how does the GlobalX telemedicine and digital health ETF seek exposure to the theme through its investments?
Definitely. We look at the theme through 4 segments. So first, there's telemedicine. Next, we have connected healthcare devices, healthcare analytics, and then administrative digitization. And to make the fund and underlying index get pure exposure to it, the index includes companies with 50% or more revenue exposure to these segments. It's also not strictly looking at U.S. companies, which we definitely like because of the global nature of this theme and healthcare in general. So there's also exposure to China and Japan, a number of other countries as well. And it's really been a successful fund for us thus far. We just launched it on July 29th, and its AUM just reached $520 million as of yesterday on 12/16.
That's fantastic. And to wrap up here, Andrew, how will the theme continue to disrupt healthcare moving forward?
Definitely. We really think that this presents immense value from a healthcare perspective, as well as from a cost perspective. So of course, there's going to be deceleration as things return to normalcy, or what we call the new normal. We think those that use it are going to remember how convenient it was, easier and fewer follow-ups, especially when you have connected devices. There's less driving back and forth. It's really hard to argue with that. And then it makes it easier to adhere to treatment, which then improves outcomes. We also see that data can be then used to help doctors improve treatment options and really, maybe even give some sort of predictive care to help patients in advance. So overall, we think there's a lot of potential in this theme, and we really think that this is the remedy to a lot of the issues that the healthcare system is facing.
All right, Andrew, great to have you with us. Thanks for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.
Thanks so much.